your take on the oil question, if you like, and I have to say we probably need to talk for a few minutes about the famous PIB. So if you could kick us off on that as well.
Yeah, just again on the sort of openness of the Nigerian economy and how the global economy could affect or impact on Nigeria. I take a slightly more benign view on that. I mean, certainly Nigeria is an open economy, no doubt. And through a number of channels you can have contagion. The oil price could be the portfolio flows, as mentioned, with the interest differential between the high interest rates in Nigeria, low interest rates elsewhere. But at the end of the day, I think this moment now, this period now for Nigeria could be actually an opportunity to fix the domestic agenda. I mean, you don't have a manufacturing sector in Nigeria that is exporting heavily into the Western market the way you have like the South African economy exporting to Europe and the US and both accounting for something like 40 or 50% of South African exports. And quite obviously, South African exports are slowing down in the export sector and manufacturing is suffering because of that. You don't have in Nigeria the kind of base metals that are under a lot of price pressure. What you have are energy resources, which notwithstanding the slowdown or rebalancing in China, whatever you want to call it, notwithstanding the slow growth in the Western world, energy resources, we think mainly because of like geopolitical issues and continued sort of energy hunger in emerging markets, in China, in India as well, are going to stay at an elevated level.
Because the global economic picture would tend to suggest that the oil price should be coming off, but it remains resolutely high despite these demand factors.
But think of all the geopolitical issues.
Sure.
Exactly. So that's where we are not really, that's where we are not concerned. Again, brings me back to what I see in this moment for Nigeria is this is the opportunity to push the domestic agenda, to push things like finally approve on the petroleum bill. The sovereign wealth fund has been put in place. Now it's about demonstrating that reserves can be accumulated in a transparent way, in a well-managed way in the sovereign wealth fund. That from our perspective, from a rating agency perspective, would be super critical, I can tell you.
Okay. First of all, do you agree with Scott's analysis that in due course, that carry trade, where there's such a great interest rate differential between Nigeria and what's available in much of the rest of the world to bond investors, that carry trade will diminish over time, spreads will compress, interest rates elsewhere will go up. If the Central Bank of Nigeria wins its battle against inflation, then clearly you're going to see interest rates here coming down. How do you see that playing out? And do you think that at the moment the monetary environment in monetary policy in Nigeria is on the right track? Is it doing what it's supposed to do? I know you didn't want me to ask you that. So answer the other questions and then see if we get to that last one.
Well, I think with regards to the interest rate situation, I think the challenge I have, quite frankly, is how we grow the economy, how we grow the real economy. And really with interest rates where they are, it's very difficult to see how you can grow the economy. And unfortunately, I think what we've seen is the government effectively crowding out the private sector. So whilst, from if I wear my boss's hat, which is the commercial banking hat, on a slightly de-risked balance sheet, the income is good. But, the reality is, I think the economy, when you talk to people in manufacturing, etc., you realize that, they're not investing. So the only beneficiaries, quite frankly, of high interest rates seem to be the banks and the portfolio investors. Ultimately, I don't think that's a good thing. So I do, sometimes I think there needs to be a bit more debate, quite frankly, about whether inflation targeting is necessarily, and all the efforts to ultimately stabilize the currency, which is it is important, of course, to have at least some clarity and visibility as to the direction of the currency. But I think we still need to ask ourselves, what do you give up by focusing on that?
I think you have answered the last question I asked implicitly. Just to stay with you for a moment, Arunma mentions global bond issues by Nigerian entities. Obviously, your game is bringing those things to market, winning mandates and distributing the paper. Do you see is there a full pipeline of such transactions, either for other financial institutions or for corporates? Do you see that being something that's going to grow over the course of the next couple of years?
I think it should. Quite frankly, I don't believe there are, I'm not aware of that many companies that are looking to capitalize on the opportunity, but quite frankly, when you see, I think it was Zambia that issued just last week, at 535 or so, yield of 535, quite frankly, if you can get 10-year money, $750 million, I would encourage, many corporates and banks to take this opportunity, because there's the window, quite frankly, where institutional portfolio investors clearly are looking at this region and they're searching for yield.
Sure. Tilly, let me come to you. Let me ask you, and by all means comment on whatever you've heard before and move the discussion on, but I want particularly to ask you to comment on the public finances, on the budget, because you've already mentioned that to us. One of the most, and this may be something we can dismiss very quickly, but I just want to unpack the idea a little bit. One of the things that shocked me most in my reading preparation for doing this panel is that 70-something%, I think 74% of government revenue is spent in running the government. Now, that is not a terribly efficient use of all that lovely oil money, even if all that lovely oil money we're getting through to the government, which palpably a great deal of it isn't, because it leaks, like the oil leaks out of the pipeline, the money leaks out of the system before it gets to the federal government. So comment on that point, if you would, as well.
Chris, I'll address that issue head on, and I think the government itself realizes that it can no longer continue to fund the economy the way it is. And I think the figure now is close to about 80%. The budget that has been presented, I think we all agree, has been, in terms of discipline, it's been applauded for that. But I think what is more important is to look at the other side of the coin, really where the opportunity is. And I think it's important, especially for the bankers here, to read the transformation agenda of the president. The transformation agenda states quite clearly that the government can no longer continue to fund the capital projects because it doesn't have the funding, because it only has about 30% of its budget available for capital expenditure and investments. What this transformation agenda also further specifies is that it has identified 37 bankable infrastructure projects valued at about 8 trillion naira that has been earmarked for private sector funding. Unfortunately, the Infrastructure Regulatory Commission has not been empowered to be able to put up a roadmap, just as the VP has done, to be able to put in mechanisms, as Arunma has said, for institutional investors and other banks to take advantage, or other investors, both local and foreign, to take advantage of financing these infrastructure projects. I was further saddened by the fact that we signed an agreement with the China Exim Bank to fund about $1 billion worth of projects. Now, because Nigeria's debt to GDP ratio is about 18%, the United States is 100 and the Eurozone is about 90. So we do have room in our balance sheet to take on debt. But I know that Nigerian banks have the capacity to syndicate $1 billion, and it will be better to see most of the private sector taking advantage of this whole thing. So clearly the government knows and admits the fact that it can no longer continue to sustain certain projects. But the private sector, the banking sector also, has to be more aggressive in getting the government to not fund these projects, but to let them be private sector driven.
Is it too provocative to say that if the government were a little bit more efficient in terms of A, collecting revenue, and B, using revenue, then it might be a bit more able to fund some of those projects jointly with the private sector?
No, I don't think so, because what is happening is that the infrastructure deficit we have is quite significant.
Okay.
And more importantly, a lot of these projects are bankable. So they can focus, the government can now focus its effort on building the health and education infrastructure.